We did see prices slip a bit at the end of last week, but we're seeing kind of a degree of stability despite these demand-side concerns still coming through with the virus situation.
Yeah, that's correct. Right now with electronic trading opening in Asia, we've got oil relatively flat compared to how we ended the week. It's in the mid-range of just above $40.60, and that's after dipping 0.5% Friday. If you look at the 5-day chart, you can really see that last week's soft economic data, we had soft consumer sentiment and labor market indicators that did cast some doubt on how fast the world's biggest economy can bounce back from the pandemic. So you've had oil having difficulty breaking above 40. And then if you look at the big picture, we're starting the week with oil, again, struggling to break out of the range it's been in, and with fresh concerns about the spread of these coronavirus cases. The mayor of Los Angeles warning that the city's on the brink of a new stay-at-home order, again, which would directly impact demand for energy, and new cases in California are accelerating. The good news is that Texas cases have dropped a bit. New York City is entering phase 4, I should say, taking a page from the recovery book that everyone's following. So there are some positives, but a big focus for the week in oil trading will be how these coronavirus cases, the resurgence of them, is tracking and whether lockdown orders are reinitiated in some parts of the country.
And so the volume of oil trading, though, declining. What are traders saying about that?
Well, they're saying that with prices treading water, and we had that ferocious bounce back from oil being below zero, there's been little to get excited about in recent weeks for the traders. And that may have something to do with the fact that volumes on both the global BRENT benchmark in July as well as West Texas Intermediate in the U.S., but mainly Brent are heading for their lowest month since 2014. For West Texas Intermediate, they're set for their quietest month since 2015. So it looks like this is the calm after the storm of trading, and there are some serious question marks on where oil goes from here. Meanwhile, Russia's oil exports are expected to stay near July's historically low levels next month, and that's a signal that Russia is serious about keeping extra crude it plans to pump domestically and then draining key refining marks. There has been a focus on OPEC as it gradually eases out of its production curbs. But again, we're hearing that OPEC very much focused on the fact that if there's a resurgence of cases in the U.S., they don't want to put too much oil on the market to push prices lower.